Hello everyone, welcome back to the channel. I hope you had a nice trading week. And for today I want to cover the DXY, the dollar index. I think it's important to consider, of course, without discarding the data that we have from today. For today, non-farm payrolls. We have also unemployment rate for the not only for the US but also for the Canadian. So pay attention to that specific data. And by the way, if you want to participate in the event from Forex Analytics to try to guess the best number for the NFP, you are invited to do so. You have the links in the description to participate. You can win a couple of prizes, so pay attention to those also. You have some details in the link below in the description, so pay a visit to that contest. Of course, it's free to participate, so I invite you to do so, of course. So that being said, the DXY, this is a daily time frame chart. I shared this, I posted this chart before with you, and I shared these possibilities with you earlier this week for the DXY, the eventual formation of the crab pattern at $99.81. As you can see, this pattern is projected above the previous lows from July 2023 last year. So, and this is a pattern, of course, which implies the price to respect this fractal support level, which means we need to see the price reacting to the upside after forming this sequence without breaking this fractal support. Basically, we want to see an immediate reaction from the DXY after completing that sequence. If completed, we don't know if the price will trade even lower or not, but let's also consider that possibility. Usually we tend to search for default targets for that pattern. If somehow the market forms the sequence, we will expect a move towards the 38% Fibonacci retracement level. So from 99.81 we will expect a move towards 102.37. If we go into a higher time frame, and let me for now delete this, if you go into a weekly time frame, there's also other patterns that I want to share with you, and that's because we have a nice cluster and eventually a nice potential strong cluster projected at these levels. Let me also push my Fibonacci retracement tool again, because there's also the 61.8% Fibonacci level right there, a few points below. And I think there's something wrong. Exactly, I need to push to this previous support. So, which means we have a very nice and strong cluster projected between 98.37 and eventually 96.49. So that's a big cluster right there and very strong, and I will tell you why it's a very strong cluster. First of all, the golden Fibonacci extension of the last swing to the upside. We are talking about the move from the lows from the Trump office to the highs of Biden governments. Okay, so we are talking about this structure, all these move to the upside. We are talking about the golden Fibonacci retracement level of that move, and we are also talking about the 38% Fibonacci retracement level. Let me try to put that in black. The 38% Fibonacci retracement of all this swing from 2008 to the highs. Okay, so this is a retracement, the 38% Fib from all these moves to the upside. Okay, and that points to basically 97.95. Right below this 38% Fibonacci, or right below these multiple Fibonacci retracement levels, we have also an important extension level, which is the 127% Fibonacci level of the last swing to the upside, the last corrective moves from this sideways moving process, or this consolidation process. You can see this as a triangle. Some of you are already familiar with this one. all this structure and the fractal resistance above. So all this swing projected below, so we are talking about a 127% Fibonacci extension of all that swing to the upside, which is important to consider also. And we have also a minor golden Fibonacci extension of the very last swing high, not the one that prints the previous resistance, you know, but the last one to the upside, the golden Fibonacci. And that's because that last swing to the upside followed by the next sequence and the next Fibonacci criteria also points me into a crab pattern projected at 96.94. So we have multiple patterns projected below converging with these multiple retracement levels, the 61.8, the 38% Fibonacci, the 127 and the 161. So if the price somehow breaks below this fractal support from December 23, we have that pattern projected right above the fractal support, as I mentioned on a lower time frame. But if the price ultimately breaks below these lows, you need to consider a potential move or let's say a significant attempt to recover based on this butterfly pattern. The crab pattern also may suggest a nice move to the upside. That being said, what can trigger these moves will depend on a lot of external events. We have, but just as I mentioned earlier in the beginning of the video, we have NFP right in a couple of hours. That may shake the market. That may force a break of these levels of support. That may force the DXY to print new highs. A lot of things may happen, and a lot of things may change. But in the mid-long-term projections, I want to share with you what has been the performance of the dollar index during the previous governments in the United States. So this is Obama government preceded by George Bush, Clinton, the father Bush, the Reagan, Carter and Nixon. As you can see, we have a pattern here. So we have Democrats tends to bring the dollar up, the Republicans tends to bring the dollar down. If somehow the DXY breaks below this major fractal support in a midterm, I will pay attention to this cluster box. If the price forms this butterfly or even the crab pattern a few points below, this is a price zone that I should consider positions to the upside. In November we have elections, so that being said, pay attention to those patterns if we approach these levels inside this cluster, and if, let's say, if the Democrats wins the elections, that may call for bullish or valorization of the dollar in the mid and long-term projections, in my opinion. So pay attention to this cluster projected below support levels for the DXY. That's what I want to share with you for today. It's Friday. The NFP right ahead, so I don't think you should try to anticipate any type of move if you are not in the market already. So of course, if you have your positions, if you are secured, if you have your break even, you know, so if you have your stops already protected, I think you should remain loyal to your positions and your studies and your analysis, you know. But if you don't have positions at this point, I don't think you should try to guess or anticipate any type of moves right before these events for today. So as I said before, join us in the contest at the Forex Analytics for the NFP. Try to guess the best number or an approach number to those that will come in a few hours. I hope you enjoyed the video, and I hope to see you in the next one. Have a nice weekend with your friends and families, and see you in the next Monday.